Welcome to my channel. I'm Dr. Romano. Somebody asked me, how do I open a hedge fund? Or how do I start a hedge fund? That's a very good question, and in this video I'm going to walk you through on the steps of establishing your own hedge fund. The first step is to have a track record. A track record is someone who has been trading for a number of years. Not 3 years, 4 or 5 years. You have your own capital and you've created a trading account, and over the 5 years, you have developed a track record based on your returns. That's the track record, is what you've been making every month and every year over a 5-year period. So once you have a track record of 5 years or more, you don't actually need 5 years. If you had a year where the stock market really tumbled, like this year or 2020 or 08 and 09, that's enough to prove yourself, and I could determine based on your returns whether or not you are proficient at trading. You have to ask yourself, why do you want to raise capital, and why would you want to own a hedge fund or an investment company? Well, there's a lot of lucrative things that you could do owning your own hedge fund company. One, you could raise capital and you could increase the amount that you have in your portfolio. It's called AUM. And from there, you could find wealthy individuals that make a minimum per year or have a minimum net worth based on what the government says that you're allowed to pitch to. Typically, hedge funds have a minimum investment amount based on how they've established the fund. My attorney has advised me to create a fund that has a minimum of $1 million or more. The reason for that is because every client that you have in that fund, the accountant and the administrator has to manage. The administrator takes care of a lot of stuff, and the hedge fund accountant also takes care of the auditing, etc. And you have to have an independent audit company come in. The accountant can't be you hiring them. It has to be an independent company. Your administrator can't be someone you hire like your wife or your husband. It has to be an independent company as well. That was all created to protect the client's assets. Because some people, they're thieves, like Bernie Madoff. He was taking the capital of his clients and commingling it with his own. And it was just a disaster. But today we have laws in place and certain filings that prohibit that and restrict that. So that's why when you invest in a hedge fund, you need to know all these things. That's why it's better to invest in a funds of funds. That's a portfolio of hedge funds. Before we continue the video, please remember, if you want to say thank you, Anthony, do thumbs up. It's right there. And that will tell me that you appreciate my videos, and I'll make more videos. Thank you so much. That's the first step. So now that you've been trading, you have a track record, you need an attorney, a hedge fund proficient attorney, meaning you need a hedge fund lawyer that does templates, that knows how to do the filings that it takes, like the 2 LLCs and the LP in Delaware. And you have to create one LLC for your actual umbrella company. Add the name of the company. Let's say it could be LTR, Capital Management. And then you need the company that collects the fees from the clients. That's another separate LLC that deals with collecting fees. And then you need the LP where the money goes. Now, you don't need to know all of this because the attorney will advise you on how to do this, and he'll do it for you. That could cost anywhere between $10,000 and $25,000. Depends you're a lawyer, depends where you live, depends if that lawyer is selling, let's say, package deals. That's the way to do it. and so forth. And sometimes if you do have 10 million, 20 million under assets, they'll charge you more because they know you're making more. So that's why it's good to start before you actually start making money, or before they know that you actually have a lot of money. Then the next thing is the attorney is going to be on a retainer, because every time you get a new client, the attorney is involved with the documents, etc. And so after you've established your legal standings, meaning you have your 2 LLCs, your LP in Delaware. Delaware is a very good place to have your LLCs and your LP because of legal issues that may come up, so that it's a little more legally protecting you as the owner and as a human. You wouldn't want to do things in other states because of their legal situation. Then after you have your legal structure created, you want to fund it. And you'll need a bank account, etc. And you could become your first client, or you could maybe have a family member help you put up $1 million, $2 million. And from there, once you've established your initial investment, you can start trading. It's not that it's hard to establish a fund. It's just that people, they don't understand what they're supposed to look for. And there's a lot of issues that come up that they're not educated like myself to understand what to look for in a trader. A lot of people that start is because they have something that's more of a dominant quality, that people trust them to make the right thing and the right choices, but that's not always the case. And so in this case, I would really look for something completely different. One of the next step is to have someone create your investment summary. Depending on what they're offering, you could do 1 or 2 pages, or it could be 15 pages. It just depends how much money you have in the beginning and what you really want. If you just want to establish the LLCs and create the proper fund structure and not really raise capital, they'll advise you based on that. And so what the investment summary is, it's your name, your company name, your education, your summary of who you are, and of course your trading returns on a monthly basis and a yearly, because you're just starting out, the person that creates that investment summary wants to also talk about what you've done in the past. And then based on that, you update it every month based on your returns are. And then over the year, you'll have your first year as a return of, your accomplishment, whether that's 2% or 180%, and so forth. From there, you need a couple of years at the minimum. Don't waste your time going out to investment companies or institutional investors, or family offices, etc. No, you need, even because I'm a doctor of hedge fund selection, and that's what I specialize in. For me, you need at least 3 years track record, and I will start to follow you at that moment, but I won't say yes or no until your 5th year. And that's really important. That's really crucial. So this is a lifelong experience. This is not something you're going to do overnight. But remember, in the long run, it's highly lucrative, because let's say that you raise $1 billion. So you could either have a rich family member, or you could have rich friends, or you actually find a family office that has someone to put up 20, 30 million, and you find multiple people like that. And so you do raise them $1 billion. If you do a 20% return on $1 billion, that's $200 million. The hedge fund manager collects 2% of the total returns plus 20% of the returns that were generated. There's other fees that are associated depending on, how big your fund is, how many years, what is the quality of the returns. And who are you marketing your company to? Because institutional investors aren't going to pay so much fees. But if you're focusing on the public and you're working really hard on trying to find all those people that have a minimum of $1 million, and you have a couple hundred clients, then those people aren't going to say, oh, I'm not paying, 20% of the returns. They're getting 80% of the returns almost. Technically, let's just make it easy. So 20% of 200 million, that's $40 million of per year that you get to keep. Now, of course, you have to pay the attorney, the retainer, you have to pay the administrator based on the assets under management and based on clients, on how many clients you have, as well as the hedge fund accountant, the audit company, etc. Of course, if you want to do this in an office, you have to pay office rent. But you could do this in your own office. You don't have to rent an office. So from there, is it lucrative to have your own investment company? Of course, it is very lucrative. Because if you could generate a 10% return per year, that's actually decent. Now, of course, over a 5-year period, if you could generate at least a 20% return at the minimum on average, that's really good. Now, of course, big institutions and other people, they use risk measures to analyze your returns. Of course, my PhD is about how that methodology is out of date in today's market. So you also have to figure out on your own how to do that and what they do. This way you could have a better mental picture of who would actually invest in you. Are you better off going to the smaller people out there that have 2-3 million, or are you better off going to the larger institutions? But that's all up to you, and that's depending on what stage of the game that you are at. Now, of course, today we have hedge fund marketers. Hedge fund marketers are people that will market your fund, and they will receive a monthly, they'll charge you for a monthly fee. You simply pay them $4,000 a month, and they will send clients to you. Of course, it depends, as well as if you have a website and you're really good with marketing your website, or if you get out there at hedge fund conferences or financial conferences and you want to market your name. You can't market your actual, returns to the public. But that depends, Lois, because they have changed, because now hedge fund managers, they could actually put their returns on their website. It's actually a downloadable PDF file that you could place. So that's pretty much sums it up on how to establish a hedge fund. From there, I hope all of you that get inspired and to realize that hedge funds are not bad. They're just typical men and women that love trading, that are proficient at trading, because those who are not proficient are not going to make it, because clients are going to leave you. So I hope I've inspired all of you to start trading and to start making money and to establish your own hedge fund. Thank you so much for watching. Please remember, if you like my videos, to do thumbs up. If you want to say thank you, it's right there. Please remember to subscribe to my channel if you like my videos and you want to see my future videos. You could also press the little bell so that you get the video as soon as I post it. And please remember to send me messages to the live chat. If you send me a message, I will respond and answer it. So please don't be shy. It's okay if you ask stupid questions. If you don't know certain things, it's okay, just ask me. And then finally, if you have friends that would like this video, send my video to them. This way they can watch it. Thank you so much for watching. Before we continue the video, please remember, if you want to say thank you, Anthony, and you appreciate the video, do thumbs up. It's right there. Thank you so much.